So recently, the rupee took a massive tumble when it breached the exchange rate of rupees 85 per dollar mark, and this reflects a long going and steady depreciation in the value of the rupee, which stood at rupees 61 per dollar in 2014. So in today's lecture, we are going to discuss about exchange rate, the reasons behind the fall or the depreciation of the rupee, its implications. Then we are going to understand why the stock markets, not only in USA but also in India, in Hong Kong, in Japan, they also took a massive hit, and we are going to understand the reasons and implications there as well. Then we are going to understand the tariffs which not only the Biden administration, but Trump is so enthusiastic in imposing once its government comes into power. We are going to discuss about the critical minerals which supplement all these concepts, and we are also going to discuss about the Bitcoin. Okay, so first of all, we are going to understand what is meant by the exchange rate. So, in simple terms, exchange rate is the value of a particular currency when it is compared to another currency. For example, simplest example is right now that rupees 85 are required to purchase $1. For example, if we are importing or exporting any commodity, or we are trading in services, simplest example is when we are going on a vacation to another country. So in Turkey, in order to make sale or purchase, we cannot use our rupee. So we have to use its currency lira. Or if we go to Brazil, we have to use its currency real. Then in South Korea, we have to use its currency won. Similarly, the pound sterling in Britain or Japanese yen. So this is what the exchange rate looks like. Now, exchange rate again, for example, if more of particular currency, more rupees are required to purchase $1, then its value is said to have depreciated. If less dollars are required, less rupees are required to purchase $1, then the value of rupee is said to have appreciated. Now, the important thing which we are going to discuss is the factors affecting the exchange rate and try to understand why the rupee took a sudden and massive tumble. So, first of all, major is the trade and policies. We know that India is always affected by trade deficit. To put facts and figures together, in November 2024, India was faced with a massive $37.6 billion of trade deficits. That is, its imports way exceeded the value of imports, way exceeded the value of exports. Okay, then it was fueled by some more stats by a jump in merchandise exports to the tune of 4.3 times, and there is a massive, it was fueled by mainly the import of gold to some stats. Moreover, 85% of the oil which our country requires, it is imported, so it also adds to a huge deficit. So what is happening is, since imports are way greater than exports, so in importing we are, for example, we need to purchase oil from the Gulf states or from US. So we have to purchase in their currency. We have to pay in dollars, or we have to pay in other countries' respective currencies. So there the demand of dollar increases. So when the demand of dollar will increase, then the rupee will depreciate because more rupees will be required to purchase $1. Similarly, if we talk about the protectionist policy which the Trump government aims at implementing once it comes into power. So that will also greatly affect the export and import realms of the countries. Okay, then the next is the inflation. So we know, what does inflation do? Inflation is a general rise in the prices. So a small amount of inflation is good because it spurs growth, it generates more jobs, it helps in the growth and economic development. But now we have been observing that the RBI, that the inflation is constantly being out of the target band of the RBI. It has been unable to maintain that moderate inflation rate. So, in that way, the money, the power or the value of the rupee is getting eroded. And moreover, the global scale, on the global scale also, there are inflationary tendencies. Okay, the commodity prices, they are rising. Then the third, we come on the capital outflows, the capital inflows or outflows. So now what has happened is, with the sudden, here we'll try to link it with the sudden announcement of the Fed Reserve. The Fed Reserve recently, you will come like we have in the stock market, the bear and the bull. The Fed Reserve, when it comes to interest rates, we will come across two major terms, the hawkish and dovish stance. So Fed Reserve, like we have the RBI, central bank in India, it is a central bank in the United States. So it took a hawkish stand, which means that it has said that instead of making regular and progressive cuts in the interest rate, it will do it on a very slow pace and very limited number of interest rates. So let us understand first what is meant by this interest rates. So interest rates essentially, it defines the cost of borrowing. So if the central bank reduces the interest rates, then the borrowing will become cheaper and easier because we have to pay less interest. The consumer, if we take the example of a consumer, the industries, the companies, when they borrow money, then they have to pay a lower amount of interest. So this paves the way for growth as well as inflation also, because greater money flows, greater borrowing will reflect greater money flows in the economy. Greater money will increase, the money will be more, and that will also generate not only growth but inflation. So now already we are going to understand what, because what Trump is trying to do is that it aims to put a lot of tariffs, immigration bans, then the increase in duties of the imports from various countries, maybe including India. So that what is happening is, already the inflation, when the supply of commodities will become less due to the restrictions on imports, and the demand will remain as such, so there will already become high inflation, because the demand of products is the same but the supply will get restricted. So domestically in US, for example, if apples are getting imported from India and there are now certain duties imposed, several restrictions imposed on the import of those apples. So they are restricted. The demand, suppose it is same, but the supply has become less. So supply becomes less and demand in relation to supply has increased. So there will be a tremendous inflation or rise in price of the apple which is being sold in USA. So, in order to curb that, we know that if the Fed Reserve or the central bank will reduce interest rate, then it will lead to inflation, and this is already going to lead inflation. So, this is going to play havoc on the economy. So, in order to prevent such a collation or such a situation, the Fed Reserve has indicated that it will not reduce its interest rates to a massive extent, and moreover till September 2024 it maintained its interest rate from 5.25 to 5.50%. Now it has indicated that over the coming months, it has intended the target to be 4.25 to 4.50% to counter the inflationary effects, if any, which will be imposed by the Trump government. Okay. So now what has happened is this scenario, because this indicates that since the interest rates will be more or less stable and the bond yields will increase, the bond yields, not only the interest rates are stable and relatively higher because of less cuts, the bond yields are also strong due to a rally of the dollar. So you will come across this term also, dollar index. So dollar index currently stands at 106. It is basically the strength or the value of dollar when it is pegged or made to stand against other common currencies. So not only the bond yield, not only the dollar is strong, the interest rates are also not getting reduced easily. So if the investors, if the capital investors, they invest money in the US market, then they will receive higher returns, higher and sustained returns. Because ultimately, the customer, the investor, he needs to minimize the risk and also obtain the last amount of money. So although the borrowing cost of borrowing will remain high, but the value or the money which the investor will get in return for his invested money, that will also be high. So that has led to the capital outflow. Capital outflow from the Indian stock markets and other global emerging market economies, and the investors are then putting the demand for dollar has increased. So this is also one of the reasons. So I hope this is clear to you. So we have already talked about the return on investments, okay, as indicated, explained in the previous board. And also there are geopolitical concerns or uncertainties, which is, for example, the Russia Ukraine war. So that has also causing volatility or instability in the markets as well as the exchange rates. And finally, as we have discussed already, the high dollar index. So the dollar has rallied, the US bond yields have increased, the dollar has strengthened. So that is why these combination of these have proved to be the depreciation, caused the depreciation of the rupee. Okay, and obviously, if the depreciation of rupee occurs, the value of the rupee is further eroded. So domestic consumers, that burden is further shifted on the domestic currency. So we are going to not only face inflationary pressures but also the erosion in the value of rupee. Okay. Then we come to the stock market decline. So not only we know in India we have the indices Sensex and Nifty, they fell by 1%, over 1%. Then we in US the Dow Jones index, the S&P Standard and Poor 500 index, it also faced the Nasdaq Composite index. So it also faced downfall to the tune of 2 to 2.5%. Then Asian emerging economies like the Nikkei index of Japan and Hang Seng index of Hong Kong, they also faced a decline. So the reasons we have already discussed, some of the reasons. So we'll just try to summarize the reasons. First of all, the bond yields. So bond yields are high in the United States of America. Capital outflows are occurring. Then, so basically, stock market, when we say, we usually attach this term speculation. So the Fed Reserve has already indicated its hawkish stance, that it is going to do only two rate cuts instead of four in the upcoming year. And Trump administration has also indicated, so speculations are rife, that the capital outflows will be there, FPI outflows will be there, and there will be instability in the market due to the indication of imposition of high tariffs. Now, what will be the implications, the broad implications on of this? So, first of all, we know that inflationary tendencies will increase all over the world. Inflationary tendencies will increase, which will hurt the global emerging market economies the most, such as India and other Asian economies. Then our central bank will be forced to comply or conform with with the interest rates as managed by the Fed Reserve. For example, it has the monetary policy, which has instruments such as repo rate, reverse repo rate. So that will have to be modified or adjusted according to the actions of the Fed Reserve, in order to protect not only the currency, but not only to protect the Indian currency, but also to protect the domestic consumers. Okay. And this may lead to lack of demand. It can lead to a slowdown, because we already know that if the interest rates are not reduced, then it will not generate the required demand. Borrowing will remain costly, and it will not generate the added impetus required for fueling the economy, generating jobs, and so on. So stagnation will be is possible. Okay, so this is in brief what is has been happening, why the rupee took a tumble, or why the stock markets are spooked. There is a uh, sudden erosion in the wealth from the stock market investors. Okay. Now, next is a very interesting thing. So, recently, again, with Trump indicating that he's going to establish a strategic reserve of bitcoins, the value has breached. It is around $107,000, one bitcoin. Okay, so again, speculation is there. So, first of all, we need to understand what is a strategic reserve. Strategic reserve basically means, refers to a stockpile of the essential resources or the entities, so as to protect its value in case of disruption in supply. So, for example, most common is that US already has a strategic reserve of petroleum, because obviously the commodity prices, especially of petroleum, is very volatile. It increases and decreases, fluctuates often, and in order to prevent that fall and rise of exchange rate, to promote and sustain stability in the economy, that excess stockpile is there. Even India has planned to establish a strategic petroleum reserve. Even Canada, these are interesting fact. Canada has a supply strategic reserve of maple syrup. China, China has a strategic reserve of metals, grains, and even pork. Okay. So now, how a strategic reserve for bitcoins can be established? It can be established either by an executive order of the president himself. He can establish by an executive order the exchange trade stabilization fund, or a congress can pass a law to create such a reserve. Okay. So now the reserve, once he comes into power, we have to see what measures he will take to create the reserve. Now, the advantages of creating such a reserve. So, digital currency, it can obtain a leverage over the other advanced or highly emerging market economies, Russia and China. Okay, then like we have discussed the strategic purpose, very purpose strategic reserves. If there are any disruptions to protect against the disruptions in case the supply dwindles or supply is affected. Okay, and to also increase the global influence in the field of bitcoins, a rapidly emerging market, and to compete with countries like China. Okay, now if we consider, because all is not rosy in this picture, the major disadvantages of relying on digital currency. First of all, we have seen in the past also that it is highly volatile, the Bitcoin. It is susceptible to high and frequent fluctuations in its value. Then there is no intrinsic value. It cannot be traded as a mere commodity like oil, metal, or gold. Okay. Then the cyber security risk, although blockchain, it is the blockchain technology which lies behind the working of Bitcoin. It is supposed to be very protective and very safe, but it is also prone to cyber security and cyber fraud. Similarly, if the government involves or partakes in circulating the bitcoins in the market economy, then also the domestic consumer can be hurt. And finally, which is often overlooked, it is not environmentally friendly because a large amount of energy goes into the mining of currencies, digital currencies like bitcoins. So, of course, we still rely a lot on the fossil fuels. Fine. So now, why is this periodic table? Because one of the agendas we have left out is the discussion of critical mineral. So recently, China put a ban on the exports of three of the critical minerals: gallium, germanium, and antimony. Okay, so first we are going to understand what is meant by the critical minerals. Critical minerals are the minerals which are supposed or which are responsible for ushering in an era of sustainable and renewable energy. Okay, so they are considered to be the new oil because right now, with all the greenhouse gases being emitted, Arctic melting, icebergs being broken off of the Antarctica. So this new oil, renewable sources, when we consider most commonly the solar cells, the semiconductor, the batteries, so all these elements All these minerals are known as critical. It is a bigger, greater umbrella term. And a market disruption. What will happen if the market disruption or there is a greater demand, lesser supply? So the economy or the country which aims at transitioning to a greener economy, reducing its carbon footprint, it will not be able to do so. It will still have to rely on the fossil fuels such as coal and petroleum. So gallium, germanium, the ban has been, and antimony. So just for facts, interesting what they are purposes used for. So gallium, it is a lightweight, lightweight metal with a low melting point similar to aluminium. Okay, it has the atomic number of 31 and it is used for making solar cells. Okay, one of the prime uses of this. Then renewable energy also. Okay, then we come to germanium with the atomic number 32. So germanium is used for infrared devices, then fiber optics. Okay, then antimony, bullets, weaponry, flame retardants. So some of the applications just for information. Okay. So we already know that one of the very common materials that is used for the development of semiconductors is silicon. But it has been observed that gallium, when it is compared with silicon to make the semiconductors, then it provides a lot of flexibility in terms of heat resistance and frequency variations. So these are the elements or the elements on which the Chinese government has put a ban. So obviously, the official reason for putting the ban, China has said to protect its national security interest. But the actual fact is that it is a retaliation for Joe Biden's government for imposing restrictions on or increased tariffs on various chip companies of China and the impending warnings and threats of the upcoming President Donald Trump to impose further restrictions. Okay, now the thing is that China leads in the production of a lot of these critical minerals. For example, if we consider germanium, it is responsible for 80% of the production, and similarly in gallium also it has contribution of 60%. So obviously the tariffs can backfire on Trump himself. At the same time, if we consider the reasons or the implications of such a ban, it can be seen in a way that in 2010 China imposed such a restriction or ban of the export of important minerals to Japan, and this led to the construction of a license company in Australia, which started manufacturing the components. So it may help in diversifying the supply chain, collaborating efforts with other nations. But again, the critical minerals, the raw materials need to be there to construct all this heat resistant materials or bullets, weaponry, renewable energy sources. Okay, so this is how you can see the various elements have been connected. So we have discussed about the stock market, we have discussed about the exchange rates, or not only the recent happenings, but the basics, the concepts as well. We have discussed bitcoins, we have discussed several implications, reasons, the mechanisms of how the things are working, critical minerals which are essential for a new and better future on tomorrow. So with that, we'll conclude today's lecture. I hope a lot of points were interesting and brought you a lot of knowledge. So till we meet again next time, Jai Hind.